Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, Wednesday, May 22nd. A couple economic news releases scheduled today, unlike the earlier part of this week where we had no economic news releases. So we'll start off with the existing home sales for the month of April. We had 4.94 million existing homes last month, or back in March. The projection for April was to increase up to 5 million, and it came in up to 4.97. So kind of split down the middle there, a little shy of the expectations. Still good numbers though. And the other item is the Fed minutes are due out today. So basically, these are the minutes from their last meeting, and people want to get indication as to what's to come or where everybody's kind of thinking. Is there a lot of dissent? The big topic, of course, is when the Fed might be pulling out of the quantitative easing or subsiding on the quantitative easing on there. And then, so we'll jump over to the headline news now. Now we got the stock market's currently up, and a lot of the big economic news releases are a lot of it's being pulled from Bernanke's testimony this morning. And in that testimony so far this morning, he kind of gave some indication that there might be some tapering off, but it's going to be, he really needs to look at how the economic data comes out coming forward, probably in the next few months. Now, there are people that think maybe it could be brought up maybe in June meeting. There's also people speculating that it's going to take maybe 3 to 4 months to see how long this plays out, and maybe they might start talking about more around September. So be prepared over the next couple of months that this is going to be something that's going to be brought up quite a bit and probably get hounded on the media as to what the Fed's next move will be if the economy is strong enough to support itself without the quantitative easing, or are they just going to cut back a little bit, or do they need to add more to it? But right now, it looks like part of his testimony, he kind of basically said that one of the reasons why they haven't dropped the interest rate from 1/4% to zero basically is because when we do finally pull out, he thinks it would really kind of hurt and have a probably deflation or stagflation in regards to our what with the asset bubble. Basically, it made it sound like it would be more along the asset. It would create more of an asset bubble, trying to unload some of the asset purchases that they've acquired when they have 0% Fed index. So that's one of the reasons why they haven't dropped that interest rate even further to basically zero, like Japan was basically at for a good decade for a while there. So be prepared. Watch, see how that plays out. Now we're going to jump over to the bond market, see what's going on over there, see how interest rates are playing out today. And we started the day off higher, but today we're down about 40 base points from where we left off. So we had a nice little rally yesterday. We brought us up to 102.69, and now we're down to the 102.38 so far this morning. So a good 30 basis points lower, which would be enough to make a pricing change for the worse. So real volatile today. It's hard to say where it's going to go, as we can see the wicks on these candles backside. So if it was up earlier in the day, even touched the 103 level, it went down, touching off the 102 30th, and it's pulled back some. So it's going to be really difficult to say as to where things are at. There's a lot of obviously trading going on right now. It may take a day or two to kind of clear itself out and maybe give us an indication. But if this does close up higher than where we left off, that could help us out with maybe a possible trend reversal. But we have to kind of wait and see what happens with obviously tomorrow's numbers. Tomorrow we got the weekly jobless claim, so that could help us out as well. All right, folks, thanks for watching. I hope you guys have a wonderful day, and we will see you guys tomorrow. Stay tuned.